Good afternoon, everyone, and welcome to our YouTube live stream, Trending Thursday. My name is Glenn Tompkins, Senior Instructor. Well, it's a little different this week. Currently, I am on my way to Pensacola, Florida to do or conduct a user group. So this is pre-recorded, but by the time you see this, I will have already been on my way to Pensacola. But even with that being said, Joey is here live, so that if you have any questions, you can still type them in the room, and Joey can try to answer all of your questions, or you can talk amongst yourselves as well. So we did not want to miss a Trending Thursday, so we're going to still have it out there, but it is pre-recorded. Once again, my name is Glenn Tompkins, Senior Instructor here. Love that you guys show up every Thursday for these sessions. A lot of new people showing up as well. If you are brand new, do not forget to comment, like, and subscribe, folks. That's important. We're trying to grow our footprint on this social media platform, and we're trying to get up to 10,000 subscribers. Currently, Joey, where are we at? 9,148 is what we're up to. Do what you can. Share this with other people. Get other people involved. Get them to comment, like, and subscribe on our channels. But right now, I do want to push the subscribe. I really want you guys to subscribe if you haven't already. And also, after you've done that, comment on the videos after Joey puts them out. Let me know what you think. Let me know what you'd like to see. We are in the process of starting a second presentation throughout the week. So at some point in time within the next couple of weeks, we will be on YouTube Live for 2 days out of the week. But let me know what you'd like to see, what you'd like to have us do. I already have an idea of what we're going to do. Before I spill the beans, though, let me get it solidified with my partner, Joey. Joey, by the way, say hi.
Hi.
As I mentioned, even though this is recorded, you can still type in the room, say hello to Joey, let him know that you're here, and he will try to answer any questions that you may have. So, if you're new, let's talk about what we do here on Trending Thursday. Once again, we are on YouTube, and it is live. Here, I'm on camera. I pinch myself. I'm real. You think I'm real, Joey? Joey doesn't know. Anyway, so this is live, but again, today it's going to be recorded going into Thursday. Trending Thursday is all about looking at stocks making the news. And what we do is we look at the stories, we utilize the VectorVest software. Many of you, hopefully, not many of you, but some of you may not have access yet to the VectorVest software. I will remind you, you can take a trial to the VectorVest software for $9.95 for 30 days. Think about trying it if you like the presentation as well. But what we do is we look at the stories, we go back into the software. I'm going to show you how to analyze any of the stocks that are in the news. So going forward, if you are a subscriber, you can do the same thing. You can find stocks that are making news, utilize the software to be able to help you to make a decision. So that's what we do. Now, the next thing we always start off with is we always look at what's going on in the market. So we utilize the VectorVest software to get a good feeling of how the market is. Is it bullish? Is it bearish? Is it neutral? And we're going to help you to make the right decisions at the right time. So we're going to bring up the market timing. Actually, we're going to bring up the home page. If you're not a subscriber, well, now you're getting a glimpse into what the VectorVest software looks like. And we're on the home page. And from the home page, folks, you're going to get a real solid feel of what's really going on in the market. We're going to start off with our market timing gauge today. Keep in mind, today is the 19th. We're already pre-recording this. So as of right now in the software, we're 3 green lights into the, or 3 ticks into the green. The color guard is bullish. This is our daily traffic light. We advocate buying safe undervalued stocks that are rising in price at this time. So not only do we get the daily traffic light moving throughout the day, but we have the guidance associated with it. Let's move over to our quick list of all of the indices. All of the indices as of right now are up. The Dow leading the charge, well, not leading the charge, actually. It's up 144 points, up for a change of about 0.5% today. But the big mover today is the NASDAQ, up almost 1% today. The S&P is up about 0.6, and our VectorVest composite, which is an indexed arithmetic average of all of the stocks that we track, is currently up about 0.6%. So as of Wednesday today, the 19th, all of the major indices are up. If we go over to our color guard is a 6-day snapshot on what's going on with 3 of our market timing indicators. The first one is the price of the VectorVest composite. Remember, the VectorVest composite is an indexed arithmetic average of all of the stocks that we track. Because we track all these stocks, 8,240 stocks in one ticker symbol, or the VVC, we feel that it is a better representation of the broad market move. The next indicator is RT. It's one of our core proprietary indicators, which is cast on a scale between 0 and 2. We make it really easy. If the indicator is above the value of 1, it's favorable. If it's below the value of 1, it's unfavorable. RT stands for relative timing. Relative timing looks at the short-term price trend in the market. Is the market in an uptrend or not? And the higher above 1 it is, the faster in an uptrend it is, and the more below 1 it is, the faster in a downtrend. Today, it is at 1.01. The next indicator is the BSR, or buy to sell ratio. Every stock in our database gets a buy, a sell, or a hold recommendation every day. There are specific criteria that a stock needs to meet to get one of these indications or recommendations. Currently, we have 1,515 buys and 1,341 sells. So we have more buy recommendations in the software than sells. This indicator is above the value of 1. Now, this indicator, the buy to sell ratio, is not cast on a scale between 0 and 2. But above the value of 1, we have more buys in the system than sells, and the market is showing signs of strength. We are the only ones in this industry that has an indicator that truly looks at the overall health of the market. All right, so these are the 3 things that are looked at in the color guard, and we track their trends on both a week-over-week and day-over-day basis to assign colors to their tiles. Now, this needs to be looked at as a traffic light overall to learn how to, 1, manage your positions that you're currently holding and get you ready for whether the market is more bullish or bearish. As we look at the lights, we have 18 lights in these 6 trading days. If we look at how many green lights, 3, 4, 5, 6, 7, 8, 9. Half of the bars that are in this graphic right here are green, which means that we have more of a bullish bias in the market right now. So when you get to a green light, what do? You go. In this case, this is a good opportunity to go long in the market. If we have more yellows in here, what do when you get to a yellow light? You slow down. And you can use this color guard as a means to manage the trades that you're currently in as the market transitions from more bullish to bearish, or bearish to bullish, or bullish to neutral to bearish, or bearish to neutral to bullish. Did you get that, Joey? Mm-hmm. Joey did get that. So this is a great way of watching the market transition. But currently we have more greens than anything. The market is still showing signs of more bullishness. Now let's take this information, and now we're going to start to get into the news story of what's making the market tick the way it is right now. No matter what goes on in the market, there's 3 things that move markets globally: earnings, interest, and inflation. Now, big in the news is coronavirus. We're going to talk about that today as well. But coronavirus is more of a news story than it is a mover of markets globally. Now, can it affect the markets? Yes, it can. But the 3 things that move markets are earnings. As long as earnings are up, we're going to be in a bull market. As long as interest and inflation are down, we're going to be in a bull market. And actually, that's the Goldilocks scenario. When earnings are up, interest and inflation are down. Now, earnings is the good guys. Earnings and inflation are the bad guys. And if inflation is rising, well, then things cost more money to buy goods, and it affects us in our pocket. And as a company, it affects them in their pocket. When interest rates are rising, well, companies have to pay more on the money that they borrowed. That takes money out of their pockets as well. In this case, though, as we look at interest is still low, historically low. Inflation is where the Fed feels that it needs to be before doing anything. So right now, we're in sort of a comfort zone in that earnings are still up. They may be falling, but earnings overall is still in a positive way. So we still are in a bull market, a bona fide bull market scenario. All right. So keeping all of that in mind, let's get into our first story. Oops. Hold on. Dang it, Joey. Let's do this. We'll leave it there and we'll do this. Here we go. First story is talking about the market. Fed Kaplan sees U.S. rates roughly right risk from the virus. So right now, when we look at the interest rates, because that's what can move a market, and when the markets are really rocking and rolling, what do we tend to do? We tend to raise interest rates to stifle an economy and keep it under control. And when the economy is not doing well, we tend to lower interest rates to help to stimulate the economy. As I look, the Dallas Federal Reserve Bank President Robert Kaplan on Tuesday repeated his view that the current setting of the U.S. interest rates is roughly appropriate through the end of the year, even as he noted risks from the flu-like epidemic that has brought parts of China to a halt. Predicting consumer-led U.S. GDP growth of 2% to 2.25% in 2020, which is a drop in the U.S. We do have a drop in the U.S. employment to 3.5% from 3.6%. Guess what, folks? People are working, all right? And a rise in inflation toward the Fed's goal of 2%, Kaplan sounded fairly upbeat in an essay released Tuesday morning, laying out his assessments. Of course, this outlook is clouded by the impact of the coronavirus originating in Wuhan, China. This disease has sickened more than 70,000 people and killed over 1,800 people, nearly all in China. So even though it is a news scenario about the coronavirus, until it affects earnings, interest, or inflation, it is still news driven. So, but overall, it looks like the GDP is predicted to be at 2 to 2.25%, which is good. And people are working. These are the things that the Fed is surrounded around making right. The Fed's job is to make sure that people are working, interest is low, or you will utilize interest to either stimulate or stymie the economy, but the other side is making sure that people are working and that inflation is where it needs to be. All right, so with that being said, let's get back into the software, and we're going to go to the market timing graph. Now, our market timing graph looks at that VectorVest composite. The VectorVest composite, remember, is an indexed arithmetic average of all of the stocks, and we track over 8,200 stocks. What you're looking at here right now on this graphic is the movement of all 8,200 stocks in one ticker symbol. So when the market is moving up, we have a real good feeling of the market moving up. Now, we look at the Dow, or we look at the S&P, or we look at the NASDAQ, but they don't track as many stocks as we track in one ticker symbol, that VVC. So in our market timing graph, we can see with today's activity, the market is still hitting a new high. This is over the last year. Let's go put this on the last 5 years. How about we're hitting a new high even over the last 5 years? Let's go put this on a 10-year graph. How about we're hitting a new high over the last 10 years? So no matter what you want to say about what's going on in the world today, this is the movement of the market. This is 10 years, as you can see down here, this is 10 years, 6 days worth of data of our VectorVest composite. The market is still hitting historically new highs overall. All right, we're going to put this down to a 3-month graph to get a better feel. We have an indicator called the MTI, which is the market timing indicator. The market timing indicator looks at 3 indicators tied up into one, but it will give us a sense of where the market is looking for a bottom or a top. When this MTI gets to a level of about 1.50, let me make this line a little darker for you. When the MTI gets to a level of about 1.5, the market is looking for a top. So I let everyone know, as a VectorVest subscriber, and if you're not already a subscriber, I'm going to give you a reason right now why you should consider becoming a VectorVest subscriber. Notice that we had a nice little pullback in the market here. A couple of things went on. We were at a level of a top, all right, which was, or a level of resistance, let me say, on the VectorVest composite, which was at $52.02. We touched it here. We pretty much touched it here. Okay, and as the market was getting to that level of resistance, the MTI, or that underlying trend in the market, was at that value of 1.5. What did the market do? It fell. Now, Just because the market's looking for a top, we cannot prognosticate when that top will happen, but at least it's a heads-up indicator to let you know that the market is at a level of looking for a top. As a VectorVest subscriber, you should not have been blindsided by this pullback in the market because this indicator was out there letting you know the market was looking toppy. All right, still a good level of resistance. Most recently, looking at this time here of 211 of 2020, it touched that level of resistance once again. Now, where did the bulls come in? Well, not only did we touch that level of resistance, we broke through on 212. That's a bullish signal. All right, breaking through a level of resistance that has been touched 1, 2, 3 times, finally breaking through, having followed through. That was a great time to get back into the market after the market pulled back, found a level of support, broke up, broke through, and had followed through. And currently, as of right now, we're still moving higher in the market. So now you get an understanding of where the Fed sits as far as interest rates. If we lower interest rates, that helps to stimulate the economy. If the economy is starting to really rock and roll, we will raise interest rates to start to slow down a rampant economy to not let it get out of control. So that's where we stand as far as the market is concerned. The market is bullish right now, hitting a new high. The Fed is saying that interest rates are in place. Leave them alone. This is where we are, and now that is why we have more of a bullish feel in the market than not. All right, with that, let's go to our next story. Our next story now does get more into the coronavirus issue. Coronavirus drug development becomes a top focused at Gilead. Gilead is one of our coronavirus stocks. All right, so a lot of big companies are really putting a lot of focus into combating the coronavirus, and that's making news. Drug maker sprints to build up capacity to produce its promising antiviral remdesivir should it prove effective in studies in China. So right now, Gilead has a potential drug called remdesivir, right, Joey? Mm-hmm. All right. And once, if it passes the tests to be able to be used in China, man, will that make them a lot of money. So, not that I want you to take advantage of a bad situation, but Gilead could put you in a situation where if that drug really hits off and makes money or helps the people in China to overcome the coronavirus, you're hearing it first right here. All right? The Wall Street Journal's Shan Li and Stephanie Yang were quarantined for 11 days in China's Hubei province, the epicenter of the coronavirus, before returning to the U.S. The reporters described what life is like under a mandatory 14-day quarantine at the U.S. military bases. All right, a team of a dozen executives at drug maker Gilead Sciences meets daily to discuss the coronavirus epidemic in China and the company's cross-continental scramble to develop the first drug for the new disease. Folks, Gilead is a stock that you probably want to put on your radar, but we're going to look at it a little different, a little deeper in a second. Another company out there is doing the same thing, Sanofi, to work on coronavirus vaccine. Now, that's two companies out there now being brought to you on Trending Thursday to go up against the coronavirus. Shares of Sanofi were up 1% trading on Monday after the French drug maker announced plans to work on a vaccine for COVID-19, the new coronavirus that has sickened more than 73,000 people and led to the deaths of over 1,800 people. The company said it will leverage previous work on preclinical vaccine for severe acute respiratory syndrome, which is SARS. Remember, SARS was a big story in China. Why is China letting all these diseases come out? Joey's shaking his head, he doesn't know. While it collaborates with the Biomedical Advanced Research and Development Authority, which is BARDA, on the COVID-19 vaccine. COVID-19 and SARS are both coronaviruses. So the information that they got in regards to SARS, they're going to try to use it towards combating the COVID-19 as well. So let's take a look at those two stocks. All right, we're going to get back into the software. We're going to go to my watch list. Go to viewers. We've already got a watch list created. for our stocks today, trending Thursday, where is it? Trending Thursday / Wednesday, 2/19/20. Here's the stocks that we're looking at for the coronavirus. Let me move these over a little bit. The stocks for the coronavirus that we're looking at will be Sanofi and Gilead. Now, I'm going to spend a little bit more time today to analyze these stocks. Sanofi, trading right now at $50.85. We have it valued at $37.09. What we mean by valuing, this is what we feel the stock is currently worth. It is not a profit target, and now it helps us to decide whether we're getting into a stock that's over or undervalued. Stocks that are over their values are overvalued. Our mantra, though, is to have you in safe, undervalued stocks that are rising in price in a rising market. Now, because the stock is overvalued, does that make it a bad stock? The answer to that is no. It just means that people are willing to pay a premium to own the stock. All right? The next one, Gilead, $67.15. It's valued at $58.15. Again, the stock is overvalued. Now, again, because these are drug companies, most drug companies will tend to be overvalued because perception is that these companies are working towards drugs for all kinds of things, and people want to get in on the ground floor to get into these drugs or get into these companies. But keep in mind, people are willing to pay a premium and hopefully to get a high reward for paying that premium. Let's look at the VectorVest indicators. RV, which looks at a stock's long-term price appreciation potential. Keywords there are long-term potential. The stock's ability to go up as compared to an alternative investment in a AAA corporate bond. A corporate bond, you buy it, it matures, you get your money back with a small interest. It's pretty much a safe investment. What we do with relative value is we compare the stock to that AAA corporate bond to help you decide whether this is a stock that you want to own long-term for the next 1 to 3 years. Now, these indicators, RV, RS, RT, VST, and CI, are all cast on a scale between 0 and 2, where above 1 is favorable and below 1 is unfavorable. Right now, Sanofi has a relative value of 0.81. Well, it's below the value of 1. Long term, I may not want to hold this stock. Next thing, Gilead has an RV at 0.87, a little better than Sanofi, but still below the value of 1. Preferably, I would not like to hold this stock for the long term. The next indicator, relative safety, or RS. This indicator is an indicator of risk for the stock. Relative safety looks at the consistency and predictability of a company's financial performance. Does this company meet or exceed its earnings expectations quarter over quarter, year over year? Companies that meet or beat their earnings expectations are attractive to investors. When a company misses earnings, what tends to happen? The stock's price falls. When they beat, it tends to happen, stock's price rises. All right? So when we look at relative safety, it gives me an indication of how risky the stock is and the ability of the stock to continuously meet or exceed earnings expectations. Sanofi at 0.99, right in the middle. So this tells me that when earnings comes out, it may or may not hit earnings. Now, the higher above 1 the relative safety is, the higher the probability that the stock should meet or exceed its earnings. Gilead also below the value of 1. Now, let's go to our technical indicator, which is RT. RT stands for relative timing, and it looks at the stock's short-term price trend. Above 1, the stock's in an uptrend. The higher above 1 it is, the faster in an uptrend it is. The below 1, the stock's in a downtrend. The further below 1, the faster in a downtrend it is. Notice that both stocks have an RT above 1. The stocks are moving. So that means nonetheless, the fundamentals, the RV and the RS, are not in tune with the stock to buy and hold, but I can tell that with the relative timing above 1, the stock is moving up. Both of these stocks become trades. Notice that both of these stocks pretty much become trades because it's based on the news, that both of these stocks are working specifically on trying to combat the coronavirus. Keeping that in mind, what else is going on? The VST, which looks at, it's our master indicator for ranking stocks, looking at RV, RS, RT into one indicator. Above 1, the stock's relatively a good stock. Below 1, it's not so much. Looking at CI. CI is another VectorVest indicator that looks at the stock's ability to withstand long or lengthy price declines. The higher above one it is, the more the stock goes up than goes down. Notice that Sanofi, the CI is at 1.11. It's above 1. This stock tends to go up more than it goes down, and it's least susceptible to long or lengthy price declines. So as I start to put this all together, I want to also look at the earnings growth rate. Because these are drug pharmaceutical companies, they tend, and that GRT is the earnings growth rate. They don't tend to always make a lot of money. Why? Because a lot of their money is tied up into R&D. And they try to make it back once they get approved for the drug. That's why a lot of times drug prices are as high as they are. They're trying to recoup all of that money they put into R&D, because a lot of these stocks go out to the FDA and then they get shot down. But they put a lot of money into getting that drug to market. All right, so keeping all of that in mind, let's go look at these two graphs. View the stock graph. Let's take a look at them. If I had to make a decision on which one I'd like to buy, look at Sanofi right now. I'm looking at a one-year graph. Let's put it down to a 3-month graph. Couple of things that I have on my graph. I have the 3 and the 8 exponential moving averages, which do a good job when the stock's in an uptrend or in a downtrend. I also have one support and resistance. Why? Because this stuff works. I love to see if a stock is breaking through resistance, or on the bearish side, if it's falling through support. Down below, I have volume that let me know that if there's conviction behind the move, whether up or down. And down below, we have the earnings per share, which looks at the stock's earnings. As I can see, it's starting to fall, but over the last 3 months, still higher than it was 3 months ago, but I am watching the earnings fall. If I had to look at Sanofi, today probably would not be the day to get into it. I do like that the 3 and the 8 are, the 3 is above the 8 and approaching a level of resistance. If I were to get into it, I really would rather wait until the stock breaks above that level of resistance to show me if the stock is moving higher. Let's go to the next one. Wow, Gilead. Big pullback from this level of the high. Notice though, even on the pullback, look at the 3 and the 8. The 3 and the 8 are still keeping you in it. Thus the reason why we like using the 3 and the 8 exponential moving averages. It does really a good job of keeping you in the stock and not keeping you from worrying, or keeps you from worrying when the stock's price does pull back. Look at this pullback. Look at the 3 and the 8 still hanging in there. If you are trading this stock off the 3 and the 8, you leave it alone. You leave it alone. Something else that comes to mind, as the stock's price is pulling back, what's going on? Less people are getting involved with the stock. See that trend moving down on volume? The stock's price may be doing a little bit of sideways mambo right now after it pulled back, but the volume on the stock is pulling back, and earnings is lower than it was 3 months ago. So if I had to make a decision on either one of these, I'd like Sanofi a little better because it's trading higher towards its level of resistance as compared to Gilead, which is pulled back and is now a little bit in a sideways move. All right, let's close out of that graph. And that is part of the story for the coronavirus. Always remember as well, we do have a coronavirus watch list that you'll find here only in Trending Thursday. Knowing that GNPX was a big mover that's in this list. Here's Gilead is in here, and where's one other? And there's Sanofi. So there's stocks in here that you can take a look at. Here's the watch list average of all of the coronavirus stocks. If we look at a watch list average, look at that. These stocks are on the move. This is the watch list of all of the stocks, the watch list average of all of the stocks. Coronavirus, these companies are out there trying to make a cure for it. And even with the pullback, look at the 3 and the 8 on the watch list average. All right, so something to keep your eye on. And the only way you get to see these stocks all in one place, again, as a Trending Thursday participant, you get to see all of these stocks that are in the list that we have as well for coronavirus. All right, let's get back to my watch list and get ready for the next story. All right, let's get into the next story. Did I do it again? Nope, that's good. All right, next story. Solar stocks. Solar stocks are making a big splash in the market. Solar industry names rip higher for the second straight day. And we're going to look at one stock in particular, Jinko Solar, rallies to a 2-year high after retaining its crown as the world's top producer of PV modules. And you say, well, what the heck is a PV module? Well, I'm glad you asked that question. A PV module with impressive year-over-year shipment, almost 3 gigawatts, Jinko Solar last year retained its crown as the top company of PV module sales. So look at that, Jinko Solar, JA, gigawatts. Let me go see. What's a PV module? I still don't know. Joey, what's a PV module? Joey doesn't know either. All right, whatever it is, and I'm sorry I don't know more about it. I saw the story. Whatever it is, it sounds that it's good. And Jinko Solar is the one that has the market on these modules. We'll also notice there's other solar companies in here. I put them into a watch list for you. So guess what, folks? I created a solar watch list for you as well that you'll only see here on Trending Thursday. Let's go take a look at Jinko Solar, though. Let's get back into the software. Go to my watch list. Jinko Solar is right there. Let's analyze it real quick. Jinko Solar trading at $27.98. Ah, look at that. Its value is at $43.31, nicely undervalued. Remember, these solar companies are starting to pop off, and now here on Trending Thursday, we're going to show you some of the best ones to take a look at. I like that the upside potential by way of RV is nicely up there, 1.59. This is a stock that I would not mind holding for the next 1 to 3 years. Now, if I look at the safety, though, it's below the value of 1. Tells me it's a little bit more of a riskier stock. Remember, relative safety not only looks at the consistency and predictability of the company's financial performance, it is also an indicator of how risky the stock is. So, with that being said, good long-term holding stock. The stock is moving up in price with RT at 1.76. This stock is rocketing. I'm looking at the VST at 1.47. How about they grow their earnings at a clip of 40% a year? Wow. So let's go take a look at the stock first. Right click, view the stock graph. Take a look at it. Look at the move most recently on the solar stock on JK Solar. Let's put this in on a 3-month graph. Look, the stock just recently broke through a level of resistance, broke through follow-through. 3.8 still in place. Watch the volume, though. Normally, when I'm looking at a stock's price rising, I want to see rising volume. But I want to see, how about today's volume is a little higher than it was yesterday? Nice open candle today, and even on the pullback, the 3.8 are solidly in place. I like that the earnings are higher than it was 3 months ago. Good earnings. I'd like to see the volume pick up a little bit as the stock's price is moving up. A good opportunity to get in. We like to talk about the 3 and the 8. How about when the 3 and the 8 crossed bullish on 2/5 of 2020? Look at that move up and still moving higher. If I'm not in the stock yet, though, let's make sure it takes out the high before you buy it. If you're in it, you did not worry when the stock's price pulled back here. Love that. So this is not a bad-looking stock. Earlier in the 3-month time period, it did well. Pulled back, found a level of support, bounced off that support, 3.8 cross, beautiful entry. Now, remember I just talked to you that we do have a solar watch list. Again, the only place you'll see this is here on Trending Thursday. I created a watch list of solar stocks from that story. This watch list consists of 10 stocks. At the top of the list is ENPH. We're going to talk about that in a second. And here is JK Solar, number 3. Now, as I look at this list, this watch list is automatically sorted by our master indicator, VST. Notice that every stock that's in there has a VST greater than 1. That's not a bad list of stocks. So which ones would I get into? Look at their graphs. Make sure you're buying into the stocks that have stock breaking through that level of resistance. Look at these. Earnings growth rate on just about all of them are good, with the exception of Run and VSLR. Both have negative earnings growth rate, but look at the CIs. A lot of these stocks can withstand long and lengthy price declines. Jinko Solar, by the way, has a CI below 1, so this stock is more susceptible to long and lengthy price declines. But now that you have this watch list of stocks in the solar space, you can sift through and find out which ones are doing the best. All All right, so that is on JK Solar. Let's go back to my watch list. All right, that was the story on JK Solar. Solar is on the rise, and at least here on Trending Thursday, you have a watch list of stocks that you can actually pay attention to. All right, we're going to let this populate again, and we're going to get into our next story. Joey, what did you do to the program? It's all your fault, Joey. Okay. Can you fix it then? Let's go see if I go to another watch list. This is interesting. There we go. So let's get into our next story. The next story is what I like to call market-moving stocks. Apple is one of the biggest stocks in the market. Okay, one of the biggest stocks in the market. Apple to fall, whoops, just happened there. Oh boy. That was interesting. All right, Apple to fall short of projected revenue due to the coronavirus. That is big news. All right, Apple Inc. became the first major U.S. company to say it won't meet its revenue projections for the current quarter due to the coronavirus outbreak, which it said had limited iPhone production for worldwide sales and curtailed demand for its products in China. So that's why it's on Trending Thursday. Apple is one of the biggest stocks in the market, and this kind of news probably will trickle down as more and more companies feel comfortable to put out to their investors that the coronavirus did hurt them. Another one. This is not on the coronavirus, though, but Tesla, another big mover in the market. Tesla spikes above $850 after Bernstein sees no imminent negative catalyst. So if we scroll down, the electric car maker surged 7.3% to close at $858, or just 3.2% below its February 4th record close of $887. It has more than doubled up just this year. Holy smokes, this stock is rocking and rolling. So one stock may be feeling the ill effects of the coronavirus, where one stock is rocking and rolling. Let's take a look at both of those stocks. All right, this is again what I like to call big movers because they are such big stocks. Let's take a look at Apple and let's take a look at Tesla. Tesla, $921, where it's valued at $166. Now, somebody out there will say, something's wrong with your value. No. Value is what we feel the stock is worth, okay? Value looks at the earnings growth rate. It looks at earnings. It looks at a lot of different things to really calculate what we feel the stock is worth. Now, at $921, people are willing to pay a very high premium to own Tesla. But remember, Tesla is the biggest name in the electric car industry. Thus, people know that it's breaking our edge of the seat type technology. There's a high perception that Tesla is going to be rock and rolling. For the most part, it is price-wise, right? But the perception is high. That's why the stock is trading so much higher than its value. Upside potential above the value of 1, favorable. Relative safety above the value of 1, favorable. RT above the value of 1, stock is in a big time uptrend. Apple, on the other hand, a tad bit over its value. Its upside potential, not nearly as good as Tesla. So as much as I personally love Apple, it may not be the long-term hold as of right now, but it is a safe stock. Even though the RV is below the value of 1, Apple tends to meet or exceeds earnings, but guess what? That number will be affected in the next quarter because they're already talking about falling short of expectations because of the coronavirus. And the stock is in an uptrend. How about another thing? Apple is only growing their earnings at a clip of 4%, where Tesla is growing their earnings at a clip of 34%. And another thing is Apple tends, even though Apple has got RV below 1, Apple tends to go up more than it goes down, with that CI value nicely above the value of 1. All right, let's right click. Let's take a look at these stocks. All right, Apple. Look at that. Apple, you just almost can't go wrong with Apple. Look at that. Interesting though. Where is Apple at? Apple is, and I know Tom is going to be in here. Tom, type it in the room, even though this is a recording. Type it in the room. This stuff really works. This is why I always look at support and resistance. Look at Apple having a hard time breaking through this level of 327.85. Well, if I'm not in Apple right now, I definitely want to see the stock break above that level of resistance before I get in. Now, as the stock is starting to move sideways, volume is falling. That makes sense, but look at the earnings per share. This company just keeps making money, but it will be affected by missing earnings. It already knows that it's probably going to miss earnings going into the next quarter. And whereas Tesla, beautiful equity curve as well. Why do we like the 3 and the 8? How about this big gap down and utilizing the 3 and the 8 on an end of day basis? Guess what? You didn't worry. And look at that. It paid off dividends for having the discipline to stick to your plan. Look at that equity curve. Love the earnings. Volume is picking back up again. Both of these stocks rocking and rolling, but just keep your eye on Apple. Even with the news on Apple, it's having a hard time getting out of its own way. Just be careful if you own it. Do not let the stock get away from you, especially to the downside. Tesla looks good, a little bit of a doji today. If I'm not in Tesla right now, I'd wait to see if it could break above that level of resistance. If you are in Tesla, you're a happy investor. You're a happy investor. All right, let's close out of that. So those are my two stocks that are big movers in the market, or big stocks in the market that are moving. And my last is going to be what I like. This is going to be a new segment that I'm going to do every week called Hit and Miss. Stocks that either hit or miss earnings. So let's get to that story. Here are my hit and miss stocks. We're going to start with ENPH. How many of you out there own ENPH? Oh, guess what? I can't see you. Haha. Anyway, if you own ENPH, you're happy. ENPH beat earnings yesterday. ENPH Energy EPS beats by 6 cents, beats on revenue. If you own ENPH, you are a happy individual. So they beat earnings, they beat revenue. Man, what more can you say about it? ENPH is a rocking and rolling stock. Let's go to another stock, Groupon. Groupon missed earnings. They missed by 8 cents and they missed on revenue. All right, so that was a miss. ENPH was a hit. Groupon was a miss. Herbalife up 5% after hours on Q4 beat. So they beat earnings. Sales 1.2, that's a big number, up 2.8%. Income, everything is up on Herbalife. So Herbalife was a hit. And last but not least, let's look at Walmart. Walmart, interesting, they rallied right past a rare profit miss. Walmart tends to not miss earnings, but they did. And because they did, doesn't matter. People are still feeling good about Walmart. Walmart rallies past its rare profit miss. So we had 2 hits. We had 2 misses. Let's go to the watch list. We'll go look at ENPH was a hit. Walmart was a miss, Herbalife was a hit, and Groupon was a miss. Let's analyze them. Right now, ENPH, as beautiful as that graph looked, the stock is currently overvalued. Remember I told you that just because the stock is overvalued doesn't make it a bad stock. All right, before I look at the graphs on these, I'm going to show you something a little different that we don't always talk about here. On ENPH, as we're analyzing the stock, I want to show you that you can right-click on the stock and you can get a full-blown stock analysis report on any stock. As I pull this over, this tells you a lot about the stock, where it's trading at, its stock graph over the last 3 months, the industry graph over the last 3 months. You know why? Because a stock that tends to go up, birds of a feather flock together. So the industry has been kind of jagged, even though the stock, this tells me that ENPH is a leader within the industry, because even though the industry has been jagged, ENPH has been solid. Scroll down a little bit more, you can get a better definition on all of the different indicators within the software. Remember, I'm talking to you about value. Value is computed from a forecasted earnings per share, forecasted earnings growth, and profitability, interest, and inflation. So as I explain to you what we feel value is what we feel the stock is worth, we give you more of a definition of that in here as well. You can scroll down, you can get a definition on every indicator that we analyze stocks with. So it's not something that we do all the time, but I wanted to let you know that you can do that. And if you look down below, there is a link. Joey's going to put a link up there for you to get a free stock analysis on any stock that you're interested in, because today I won't be able to do a quick fire of your stocks. But if you want to get an analysis on your own individual stocks, Joey will provide you with a link that you can get a full-blown stock analysis report today. All right? I'm going to close out of that. And now let's go back to ENPH. Let's go back to Walmart, Herbalife, and Groupon. So ENPH, over its value. Remember, it doesn't make it a bad stock. It just means that people are willing to pay a premium to own it. Upside potential, really there. This is a stock that you don't want to mind holding for the long period. Relative safety above 1. Well, the stock beat earnings, right? Normally when RS is above 1, a stock will tend to meet or exceed its earnings expectations. And RT at 2.00, the stock is moving as fast as it possibly can. And look at this. They grow their earnings at a rate of 48%, and that CI tells me that the stock goes up more than it goes down. Walmart missed, right? The stock is over its value. Look at that. Upside potential is there. Walmart may not be a stock that you might not. Walmart may be a stock that you won't mind owning for the long term. The safety is there. The stock will tend to meet or exceed earnings. Notice the story said that this was a rare earnings miss. That relative safety is above 1 to tell you that most likely this stock will meet or exceed earnings. Relative timing above 1. The stock's in an uptrend, not screaming up, but in an uptrend, and they do grow their earnings at a rate of about 9% a year. This stock does go up more than it goes down because that comfort index or CI is above the value of 1. Herbalife, they did go and blow through earnings, which was great. This stock is undervalued. Upside potential. Herbalife may be a stock that I don't mind owning long term. Relative safety is not above 1, so it may or may not hit or beat earnings, but the stock is a good long-term play. What I don't like about it, it is a sell recommendation. The stock is not in an uptrend right now, even though the story just hit yesterday. They beat earnings, upside potential. The short-term price trend is not there. They are growing their earnings at a clip of 12%. So a couple of things about Herbalife. This is a stock, I would call this more of a value stock, a stock that I wouldn't mind holding. Does it pay a dividend? No dividend. So, man, this is interesting, a stock. RT is below 1. Be careful with that. Even though it beat earnings, the stock is not in an uptrend yet. Let's go to Groupon, who missed. They are undervalued, okay? Upside potential, pretty flat. Relative safety below 1. And the stock is not in an uptrend. Groupon is probably not a stock that you want to hold on to. Long term, it is a sell recommendation. The stock has negative earnings growth rate. Altogether, not a good stock. Let's right click on the stock. Let's go view the stock graph. Let's pull this over. ENPH. There's nothing, I can't say enough good thing about ENPH. Let's put earnings on. Where's my earnings play? It just hit earnings. There it is. There's my earnings play. Let's go put this onto Dateline. There it is. Put this on a 3-month graph. It beat earnings, and look at that stock's price rock and roll. Big, beautiful volume. And what we were talking about yesterday in the software, just in case you were concerned about it meeting or exceeding earnings, yesterday was a good time to put on a covered call or buy puts just as protection. But the stock gapped up, and look at that. Nice stock that beat earnings and nice up day today. Next one, Walmart. Walmart missed earnings. All right. Walmart missed earnings, and they are feeling the effect. But notice that the 3 and the 8 are still in place. Just leave it alone. Let the 3 and the 8 manage the trade. One day is not a doubt, and one day doesn't make a trend. But you do know that they did miss earnings. Just keep that in mind. Earnings per share is higher than it was 3 months ago. Volume is pretty steady, and right around that level of average volume as well. Let's go to the next one. Herbalife beat out. You know what this is? That's a green candle, and it's solid. That means the price started at the top of the candle and pulled back. Notice that the 3 and the 8 are bearish. So even though the stock beat earnings yesterday, all right, know what this is? This is a lot of profit taken. Look at the big wick at the top, which stopped right at that level of resistance at 42.74. That's a lot of profit taken on Herbalife. The stock yesterday closed at 38.95. It went up to a high of 42.67. A lot of profit taking. As overall, though, look at the stock is in a downtrend. Even though it beat earnings, be careful with Herbalife. And the last one is just Groupon. Woo! Groupon missed. I'm not touching that. You know, this is like MC Hammer. Don't touch that. All right? That's funny, Joey, wasn't it? Mm-hmm. Joey didn't like it. He's got no musical acumen. That's why. Anyway, stocks price. Who's that? Lil Pop? Pop Smoke? Pop Smoke. Pop Smoke. All right. Anyway, so I shot him out. That's all I'm going to do. All right. The 3 and the 8 crossed to the negative side. And still is, man, Groupon is just not a stock that you probably want to touch right now. Big down day, big gap down after the earnings missed. And look at that big volume. A lot of people are selling out on that stock. Stock got to be a sell recommendation today. All right. So I took a little extra time this week to analyze the individual stocks that are in the watch list, specifically for the purposes of, because I won't be looking at your individual stocks this week. So I wanted to put more emphasis on the power behind the software. For any of you who are brand new, folks, this is the power of the software. We can analyze any of your stocks to give you a better understanding on what you should or should not do with the stocks that you either own or are interested in. And if you like what you saw today, folks, don't forget to comment, like, and subscribe. Subscribe. We're trying to get up to 10,000 subscribers. You guys can help me to do that. You really can. And don't forget to comment, because the comment lets me know that you either like what you saw. If you don't like what you saw, let me know that too. And whatever you want to see, let us know that too. So with all of that being said, folks, I want to say thank you for joining us today, even though this was a recording. But hopefully Joey was in the background answering your questions. I know he was. And I know you guys the whole time were talking amongst yourselves as well. So keep up what you do. Keep coming out. New people, I hope to see you again. Please come back. Invite other people. And if you do, get them to subscribe. All right? With that, folks, adios, arrivederci, ciao. I'll see you next week once I return from Pensacola. And I got to do it again. What is it? Adios, arrivederci, ciao. Au revoir, sayonara. See you next week, folks. Later.